Hello and welcome to Marco on Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good morning. It's Wednesday, 12th of August 2026, 9:54 a.m. Market is about to open. Today we have Commonwealth Bank coming out with its earnings this morning. So I'm interested in that one because I have a position. I've had a quick look at the financial reports there. We'll go through that shortly. We've got the indicator here that the market will probably open down 0.4% or 39 points. Overnight, we had the S&P 500 down 0.32%, the Dow Jones down 0.34%, and the NASDAQ 0.6%. These gains here showing on the screen are from yesterday for the All Ords and the S&P 200. Okay, so let's have a look at, I'll just log back in there. It's logged me out. One moment. Rightio. We'll just have a look at the indicators, market indicators this morning. Commonwealth Bank is showing at $174.20 up. So in the earnings report, they've put out an investor presentation as well as a myriad of other documents. I've had a quick look through there. Some of the highlights were that the sorry, I've just got this on the screen. Okay, the cash NPAT rose by 7.1% to close to $11 billion. The full dividend increased by 20 cents to $5.05 per share, with a final dividend of $2.70. We've also got a growth in lending by 7.1% and deposits grew by 8%. Our business lending grew by 1.3 times system, and CBA maintained lending, retail and business market share positions. The balance sheet remained exceptionally strong. The capital ratio of 12%, well above the APRA minimum. The total provisions of $6.5 billion, sitting $2.7 billion above the central scenario. Deposit funding increased to 79%, reinforcing funding strength. Some of the negatives in the report were that the net interest margin fell to 2.05%, and that was down from 2.08%. Competition in mortgage and deposits remain intense, and management acknowledged margin pressure. Credit quality is slowly deteriorating. The loan impairment expense increased to $788 million. Home loan and consumer finance arrears are rising due to cost of living pressures and higher interest rates. And there's possibly a buyback disappointment there, as the current $1 billion buyback will not be extended, and some investors may have hoped for additional capital management given the surplus in capital position. So on the whole, it is mildly positive report. So we'll see how the market opens shortly. Let's have a look. It's 9:59. So I'll just do a refresh here that probably has opened now. And it's opened fairly flat at 0.19%. So it hasn't been punished like we saw earlier in the week with Westpac. Let's just have a look at my market movers and then we'll come back to the report and finish that off. So on my watch list, we've got Accent Group up 1.4%, Viva Energy up 0.3%, Commonwealth Bank up 0.1%, and on the downside, we've got ANZ down 1.1%, Macquarie down close to 1%, Wesfarmers down 0.9%. We'll see, have a look at the All Ords and see how that opened. So that did open down 0.4%. Okay, we'll finish off the Commonwealth presentation review. A couple of things to highlight is that application volumes have softened. Commonwealth Bank have said that in their report. Home loan applications were down 17% versus prior corresponding period. I'll just bring up that little graph. Owner occupied. Okay, so here it is here. So application volumes have softened 17% versus the corresponding period last year. And applications have been down, home loan applications have been down by 15% since the May budget, and I spoke on that yesterday. Investor applications were down by 28% and owner-occupied loans were down 9%. So as you know, the Australian housing market is softening at the moment. Despite that, the home loan balances were actually up 5.8%, apologies. And home loan funding remains strong at $95 billion in the second half of 2026. Home loan lending broadly in line with system growth. Okay. Okay, so yeah, we'll see how it goes. They also had, I'll just see if I can find it. It was quite interesting to see that in advance. So a lot of home loan account holders were very ahead in their repayments, or at least had quite a bit in redraw or offset balances. So we can see here that 85% of loans were in advance, and these are the offset balances. So that was similar to Westpac. We saw, I think it was like 76 billion, and then it dropped by 1 billion to 77 billion to 76 billion. And we've seen Commonwealth has gone from 164 billion from December to 157 billion in June. So you can see that's dropped by $7 billion. That's the offset and redraw balances in that 6-month period. And we had an increase there in the prior 6 months. But year on year, the offset balances and redraw balances are actually higher. So that's interesting. So on the whole, it was fairly positive. We'll see how that plays out in the market, but have a look at that report. It's available on from your trading. If you go into the ticker code CBA, this will be the same on most platforms. And then if you just go into research Actually, in news and announcements, apologies. There should be two tabs. There's the ASX ones and there's the news. And in here, you'll find there's about 5 or 6 reports published today that are available for review. So they're all there and you can download those. Okay, we'll go back to the broader market now. Let's have a look at the ASX 200 and we'll see what the movers and losers are, the increases. Let's start with the positives. So we've got AGL up 5.2%. That's obviously energy. We've got AAI, which I'm pretty sure is oh no, that one's Alcoa, apologies. Alcoa is up 4.62%. Suncorp Group up 4.09%. They do banking and insurance. Austal is up 4.2%. That's the aerospace and defence. They were there yesterday as well, so that's interesting. They're having a good run. And Origin Energy is up 2%. So we're seeing a theme of energy and insurance there. I'll just have a quick look at, I'm interested in Austal, so aerospace and defence. I just want to have a quick look at their graph because they have made the top 5 chart a few days now from memory. So let's have a look just in the last month. So from the bottom around, okay, so they've had significant growth. In the last 23 days, they've put on 36%, okay? So they've gone from like the $3.40-ish mark to about the $4.60 mark. I just want to have a look at a longer graph. Okay, so on the long term, they were traditionally around the $2 mark. They had a peak in around 2020, and then they retreated down to around that $2 mark again until about 2024. And since then, they've gone from $2.30 roughly up to $7, and now they've come back down to about $3.60, and the current share price is $4.50. So had a bit of a roller coaster there. Fairly new company, it looks like. Okay, let's have a look at the losers. So we've got, I need to get 5, don't I? So we've got seek.com. They do employment services. So if you're looking for a job, you can go onto their website. They are down 16.6%, which is huge. I'll just have a quick look to see if they've done any announcements today. They've released an impact report and a full financial presentation and the results. I'll just quickly have a look at those, see if we can see what the issue is there. So they've got strong financial operation performance, upgrade from medium-term goals, and record an annual dividend. The yield growth is 18%. The operating leverage is 10% growth, and there's been an 8% cost growth. AI delivery. Sales revenues up by 17%. Net revenue is up by 10%. Expenditure up by 8%. They reported a loss of 307 million. So that's not good. It's interesting they're still paying out a dividend, even though They're reporting a loss, but they do have free cash flow of 246 million. So in that loss is obviously non-cash items. Okay, I'll have a look at that in coming days, or I'll try and have a quick look at it today and see what the negativity is. I didn't realize Ian Narev was, he used to be Commonwealth Bank, so that's interesting. So I'm not sure what his role is, but if he's penning a comment there, he must be on the board in some, or a CEO or some description. All right, so sorry about that. I digress. So 16.6% down, and that's retreated to bits now, 15. We've got PMV, that's Premier Investments. They do retail, I think like Just Jeans. They're down 9%. That's not good. Let's just see if they've had an announcement as well. They've done a retail update this morning. I won't look at that now, but obviously it wasn't liked by the market. Low Visa is down 3.4%. So that's another retailer. Life 360 is down 3%. So they had 18 to 19% yesterday, and then another 3% today on the back of their earnings. And the last one is Ryman Healthcare. They are down 2.8%. So let's just have a look again at my list. Okay, so we've got AX1. That's interesting. That's a retailer. That's one of my long positions. Actually, I'll update the pricing on my portfolio. So it's currently 71.5. And so that's up 1 cent. Still down miles, so still down 62% after adjusting for dividends. CBA has come off now. It's down 1.93%, so the market's not liking the report. Clearly $10.8 billion for the year profit was not enough, and it was probably the net interest margin that they didn't like, and also that the number of loan applications has dropped, because that means that, you know, future growth is affected. But they have bounced around a bit today. They've got up to 174.84, and as low as 170.11, and my target sell price there is $181. So, you know, we're down now 3.79%. So that's going to be a bit of a wait now. So this is the danger of having stocks around reporting season. If you're a short-term trader or short-term investor, for the long term, it doesn't really make much difference, because they generally will go up over time. So Coles is down. It's up a little bit today, but we're down 1.39%. That's my closest position to selling. And then the final one is Westpac. It's down a further 0.64%. So that's now down 6.63% in 5 days. In fact, all these three positions here, Commonwealth, Coles and Westpac, I've had only for 5 days now, on the $40,000 investment for each, in total down $4,700. So the market can move very quickly in the negative direction as well. So, okay, well, I'll leave it there. That's a wrap for today. Thanks for watching and supporting the channel. I'll try and do a market close today. It may be late, as Wednesday's a very busy day for me. So have a good day and happy hump day.